So tell us how this would work. Does it have to do with Maryland-specific transactions, and how much revenue do you intend to raise?
Well, good afternoon. It's a pleasure to be here with you. And I think, as you all have been discussing, the world is in this moment of significant technological reform. And I think states are now asking the question of how do we capture the externalities that have been created. It's wonderful, the innovation that's been launched here in the United States, the beauty of capitalism and innovation. The challenge is we're not seeing the contribution that we would traditionally expect from companies who are benefiting from the public investments that we've made over time in public education, in public health, and in public safety. And so states are now forced with this question of how, in this new economy, with these new entities, these new corporate entities that have been built in the last 20 years, how do they participate? And so what this piece of legislation does is say that the nexus between the state of Maryland and these large platforms are the digital ads that are being placed in Maryland on devices in the state of Maryland. And so what we have done, instead of a sales tax transaction, is we've said we are aggregating the estimated amount of advertising revenue that would be derived from the state of Maryland based on advertisements promoted and shown in the state of Maryland. And then we put a gross receipts tax on that amount, ranging in a progressive way from 2.5% up to 10% based on global ad revenues.
So how does this compare with the way that Maryland taxes other advertising transactions, whether they be billboards, television, print, and so forth?
So this is really focused on the platform-based ads. This is something that didn't exist 20 years ago. And so Maryland is looking at other examples. If you look at what happened in South Dakota with the Wayfair case, sales tax wasn't applied for out-of-state sellers. The Supreme Court, after a decade, stepped in after South Dakota moved forward, and now almost every state in the union is using the benefit that has been created by online sales. And there are now aggregate marketplaces where those sales tax from out-of-state sellers, when it is being benefited in the state, is now going to that state. It's a novel question because these are brand new industries when it comes to state taxation models.
Senator, good morning. It's Deirdre. We've seen billions in penalties and taxes heaped on the tech giants over in Europe, but they've, basically amounted to speeding tickets. They haven't led to any real structural change. Why will your tax, or how might your tax be different?
Well, I think at the end of the day, all of these platforms have benefited from the public investments that have been made in states across the country. But I can only speak, of course, from my perspective here in the state of Maryland. We have a great public education system, but we are trying to make it better. And so we launched a 3-year plan to review public education, but we have to fund the investments, a full-day pre-K, ensuring that teachers are treated like professionals, making sure that we have real pathways through and to college. That costs money. And these platforms have benefited from our prior investments in those public systems. And we think that they should also contribute to the ongoing building of our civic society. That's not only in our interest here in the state of Maryland, it's in the platform's interest as well, so that their platforms can continue to be consumed by people in the state of Maryland effectively.
Shepard Smith here. Thanks for watching CNBC on YouTube.